First up today, China has released its latest economic statistics showing GDP growth that slowed slightly to 6% in the third quarter, yet 6.2% overall for the year's first 3 quarters. While China's growth remains remarkably robust compared with other economies around the world, the international media portrayed the news more pessimistically. CNN, for example, headlined that China's growth had dropped to its lowest level since 1992, while others wondered if the trade war would further damage both China and the global economy. Beijing, however, dismissed such pessimism, expressing confidence that macroeconomic growth is still on target for 6 to 6.5% for the whole year. So what's the real picture of China's economy today, and how might the challenges of China-U.S. trade talks impact its growth? Joining me for the discussion, Gong, a professor of economics at the University of International Business and Economics, and our current affairs commentator, Einar Tangen. Gentlemen, welcome to the program. 6% of GDP growth for Q3 this year, and it's always a multitude of factors. Are the factors this time more external or internal?
I think it's a combination of both. Certainly, I think a lot of people have been talking about the impact of the trade war. I think in absolute terms, the direct impact on trade war, I think, is quite limited. But I think it's more sort of profound impact in terms of the business confidence, investment confidence. I think a lot of investments are holding back. And also maybe, some companies, American companies, are contemplating the prospect of moving out of China. They're probably holding back investments. So I think, it's the broader mood in the market that is sort of holding back the economic activities. But in the grand scheme of things, U.S. trade, Southern U.S. trade represents something less than 2% of our national economy. It's a small number. I think the more fundamental reason is the fact that the world economy is slowing down, and Chinese economy is also slowing down. There's no denying that. We've seen numbers quarter after quarter coming down, all the way from 6.4% at the beginning of the year, now down to 6%. But I still want to mention that the overall target this year, the range between 6% and 6.5%, is going to be met, it looks like. It's going to be met because you would have
Chinese authorities agree with you.
Yeah, well, I mean, you really need to have something less than, 5.4% less than that to make an aggregate number that is less
given
than
what we've had for the first 3 quarters.
For 3 quarters. I think the situation hasn't gone that bad yet. I mean, there's some inertia, there's some momentum as economy grows. So I think if it's going to slow down, well, indeed we are slowing down, but it's not going to grind to a halt. I mean, it's going to slow down gradually.
We'll talk about the trade war and its effects on China's economy in a minute. Einar, what accounted for the slower growth?
Uncertainty. I would agree with John on this. What you have here is Donald Trump imposing these tariffs. That has led to a knock-on effect. You're seeing issues in terms of trade between South Korea and Japan. And there's this kind of defensiveness that's coming back. People are not investing. You're already seeing 3 quarters of negative growth in the United States. Germany, in terms of the manufacturing, has been in recession already for quite a while now. So you're starting to see what will in turn become a recession. Those are due largely to external factors. There's the largest post-world economic expansion going on. There's been an inversion in the bond yield curve in the United States, which is a very, very strong indicator. All the indicators are there. The question is how deep and how long will this recession be? But it has nothing to do with China. Now, for real terms, think of it this way. China is still growing by more dollars than the United States, because 6% or 6.2% of 13 trillion is much better than the 2%.
By volume, it's still,
But by sheer things, China adds an economy the size of Australia to its numbers each year, and that's not true for the United States. So in comparative terms, China's doing the best. Remember, China's been carrying the world with about 30% of world growth. Now, you see the IMF, the World Bank have all cut back. They're now saying that it's going down to 3%. It could go lower, and we could be looking at a recession, as I said, going in the future. But it's not really fair or rational to say, oh, this is somehow all about China. The truth is, the best thing would be China and the U.S. to get back on terms, because they represent such a huge proportion of the consumption in the world. And without that consumption, all of these countries that supply materials and things like that, the same countries that are buying these things, they would have a real problem.
Yeah, because of China's contribution to world economy, like Einar mentioned, these new numbers have made immediate international headlines. I'm going to read you some of those headlines we have here. From CNN, China's economic growth drops to lowest level since 1992. And this one from CNBC, China's economic growth could fall below 6% in 2020. Einar, when you read headlines like that, does it make you feel that they paint a rather dismal picture of the Chinese economy? I mean, pessimistic is a big word, but why the negativity?
Well, if you start looking post-Donald Trump, you start to see a very large increase in negative China stories. China has been identified as the problem. Donald Trump has been successful in selling this to the American public and also to the American press, which trumpets this all the time. It's a form of media bias, not based on they're trying to do evil to China, simply because they don't know. Repetition is the weapon that is used here. For instance, I go on shows regularly where people will start saying intellectual theft, and I always say the same thing. Can you name some cases? They name the same two cases, which have really nothing to do with large scale. They have to do with individuals, but not necessarily the Chinese government. But this is repeated so often on the social media and in the international press that now everybody, quote, buys into it.
You know, CNN has been saying this at the beginning of the year. When the number came out at 6.4%, they've been saying, oh, this is the lowest number in the last 30 years. When the number came in at 6.2%, oh, this is the lowest number.
It's factual, but just the repetition itself makes you think.
I think there's the semantics behind it. I think the mood, the tone embedded in the statement is not good intention, in my opinion. And also, I want to point out the positive side of this. Not many countries that currently can achieve above 6% growth this year. Only a very few countries that can. I mean, this came from the World Bank. There's only a few countries. India is probably one of them.
India's dropped.
India's dropped recently.
Yeah,
I think Bangladesh is one of them, and a few very small West African countries like Cote d'Ivoire. These countries are able to generate a growth rate a little bit higher than China's. So, we think I can put another spin on this. China's growth is twice as much as the United States, probably 3 times as much as European growth rate, right? But, the
5 times.
The CNN of the world doesn't just Japan, I think.
Oh, Japan, yeah.
CNN of the world doesn't portray a picture like this. It uses this, the negative side of the story. Yeah. So every story has two sides. It's like
really
a coin has
down
two sides.
to how you interpret the numbers.
Not interpret. Good reporting would have put all the numbers of the countries across the world and how they've changed. And
but it's a headline. They might argue that this is the headline and it's factual.
The headline is factual, but the fact is it's not accurate. All right? It's just like words and meaning. You can say a lot of words, but if you don't understand the meaning, it's not there. They have failed in their journalistic integrity. What they should be doing is China is at 6%. The U.S. is dipping below 2%. This is where Japan is. This is where Europe is. And the World Bank is saying we're going down to 3% growth. So when you start looking at that and understanding what that means and what China's proportion, that 6%, 30% of the total world's growth.
From China,
so, what are they hoping for? That China does worse? All right, this would absolutely be cutting off your nose to spite your face.
Okay.
So they need to be more accurate and more balanced about how they're reporting these things.
Okay. For years, China has been saying that we're not going to judge the health of our economy based on how fast the economy grows.
Right.
We're going to look at the quality
of growth,
of the economic growth here. What are the quality factors can we look for in the current situation here? Are there any indicators of the Chinese economy that are on the brighter side of things?
Sure, of course. And one thing I can immediately point to is poverty alleviation. I mean, these numbers are not directly reflecting the GDP figure, but millions and millions of people are benefiting from the government's initiative to alleviate poverty and eliminate poverty in President Xi's words by 2020. So that's a one aspect of quality growth that is now directly captured by the GDP figure. I think, Anna, we've been talking about this.
Sure.
The GDP figure isn't really a very comprehensive comprehensive and the best figure of reflecting the overall economic activities. We got to be, coming up with some better and smarter estimates. The thing is that the economy itself is becoming more and more digital. There are certain things that are not being captured directly by GDP, value-added calculation, and I think we should do something about this. But overall, the number is still quite reliable. If we talk about quality growth, there's only certain things that can be done with this metric.
But let's talk about quality growth. When you start just talking about disposable income, right? Because this is what drives the economy now. So much is about choice, right? If you can't make choices, you don't have income. So as the disposable income goes up, that's a big economic driver. So in China, it's about 5 times what the U.S. disposable income is growing at. So you look at this here, 5 times. So you tell me, which one do you want to be in as a business person? Why are the economic flows, which were at a record in 2018, direct investment flows into China, actually about, 6% ahead, a little less than 6% ahead of the record year they had in 2018. China represents a very, very important market. And this is the insanity of what Donald Trump is doing. He's, in essence, locking out and decoupling the American economy from one of its biggest potential markets, a market that they need for growth.
Let's just spend some time on the effects of the U.S.-China trade war. How much of a toll has that taken on the Chinese economy, and how much of it is to blame for this growth number?
I think definitely there's a toll on China. There's also, if not a larger toll on the United States as well. I think business are indeed hurting. I mean, you can see that the exports to the U.S. is just dropping by 20%, I think, the last quarter. And that represents a lot of jobs, a lot of business opportunities. So I think, this tariff there's no winner in a tariff war. Both sides are losers, I think. The tariffs imposed by Donald Trump is actually mostly, in my opinion, paid by American consumers. People by Christmas time are going to find out that the tariffs are coming to haunt them, hitting their pockets. On the China side, I think it's mostly manifested in loss of jobs and also loss of business opportunities.
But there's another trend you should be paying attention to, and that is the trade that is lost to the United States is being pushed into where? Belt and Road countries.
Right.
China's not going to back off on those commitments as it seeks to continue its progress on the Belt and Road. So this spells long-term a weakening of this relationship with the U.S. I'm not saying ending, but with Donald Trump making it very difficult to do trade and very uncertain, companies are going to be looking elsewhere.
All right, that's all the time we have for the first half of the program. Gentlemen, thank you so much for your insight, Professor Gong and Einar Tangen.